Hello friends, so welcome back again to our channel for this option trading strategy series. So today we are going to have a look at an option Greeks Theta and Vega. Okay, so if you are watching this series for the first time, then we have also uploaded the video for what is an options and its basics, and also we have covered the option Greeks of delta and gamma in our previous part 2 videos. Okay, so we'll be showing you guys an playlist at the end of the time, so please do click on that and watch it. And also this is my Twitter ID, friend, so we'll be posting this Twitter and our Telegram channel's ID in the description, so please do watch that as well. Okay, so let's enter into an session now. So there is a disclaimer that this is only for an educational content, and please do your own analysis before taking any real trade based on this. Okay, so so earlier we had a look at the theta and gamma, so now we will be going to delta and gamma. So now we are going to have a look at the theta. So theta is an option Greek which we have to look after delta and gamma. Okay, so theta will tell us the decay of option premiums over the time period. Okay, so this is, we can also mean it as a time decay. So option premium will always have an intrinsic value plus time value, right? So for option buyer, the time value will be against them, as that theta effect will be there in the option premium because of, so by the time of the expiry day, the option premium will only have an intrinsic value, so which is like the distance between the stock strike price and the underlying stock, right? If it is an in the money, if it is expiring the out the money, then there will be only a time value, and the time value will become zero as the uh, expiry day getting nearby us. Okay, so if you're an option buyer, then the time value, you have to lose the time value, so only the intrinsic value you can earn. So if the stock is not moving violently, or it is not moving in a good directional way, then the time value will act against you. Okay, so if theta value is higher, then the time value will decay faster. Okay, so theta value will be negative for an option buyer because like you are going to lose the money, and positive for an option seller as they are going to earn that time value as they have sold. Okay, so then option traders can take any credit spread strategy, option strategy, or selling an options where the time decay will be in their favor. Okay, so if you're an option seller, then you can enjoy the time decay. So even if the stock is not moving anywhere and it's staying flat for a week of time, then the option premium will start lose, will tends to lose that premium due to this time decay, which is done by the theta. Okay, so if you're an option buyer and option is not in the money, then it will be better to close that as close before the expiry day, as the time value will become zero on expiry day. Okay, so if you are an option buyer, don't hold the options till the day of expiry, because you will be losing the time value, and if the stock is nearing the expiry, then the time value will decay much faster than the time at the starting of the, if it is having the more time for an expiry. Okay, so if you're an option seller and if option is in out the money, then the time decay will help you, and if the stock even doesn't move anywhere, the option premium will expire worthless, which is zero. Okay, so if you have sold some options and it is an out the money and the stock is not even moving anywhere, even you will be going to gain some value. But I'll tell you guys that the naked option selling comes with an unlimited losses. If there is any gap up or gap down, then your sold options will tends to lose so much money, which we have seen in the gamma, right? So the gamma effect will come here if the underlying stock starts going against you. Okay, so always do an credit spread or some kind of an options strategies, so that your option selling will be hedged, and if the direction of the stock going against you, then you'll don't lose much. Okay, so option seller can get an entire premium if option expires worthless, which is if the option is an out the money, then you will be going to get the entire premium as your profit. Okay, so now we are going to look at the Vega, which is an fourth option Greeks. So Vega is a new next option Greeks, which will tell us the change in option premium for 1 unit change in implied volatility, right? So you might have gone through that IV. If you have a look at the option chain, there you can see that there is something called an IV, right? So there will be a different IV for each strike price. So IV will tell us that the volatility of a particular option till its expiry, and IV will change dynamically based on market's outlook. If there is any news which is, let's say if there is an result going to be announced for the particular stock, then there will be some panic, and based on that the IV will tends to move higher. Okay, so if the IV is moving higher, then based on that the stock price option prime premium is going to increase. That is based on the Vega. Okay, so Vega will be higher for at the money than in the money or out the money. Okay, and long options will have a positive Vega and short options will have a negative Vega. Okay, so if IV increases, the option premiums will also tends to move higher. So this is an reason that most of the people will do an option sellings when there is some strategies, if the company is going to announce some results, right? So based on this, by looking at the Vega and IV, we can do this expiry earnings trade. Okay, so means like based on its result, before the day of the result the IV will increase, so that will, if you are a seller, then once the result gets announced the IV will tends to cool down. So by that you will be going to capture the option premium even if the stock is not moving anywhere. Based on that IV gets cooling down, you will be going to earn some option premium. Okay, if IV increases, then option premium will also tends to move higher. So it's better to avoid an option buying on higher IV, as the premiums are already in a higher, already it's in higher. So even if the stock is moving, the option premiums will not move much, because of this premiums are already in the higher way. Okay, so thanks for watching, friends. So please do subscribe to our channel and also click on the like button. Also do some comments, share to your friends, so that we'll be tends to upload so many new videos for this option strategy. So thanks for watching, friends.